remarks. I hope sir is there. Good morning to all. Good morning to the participants. As we are moving forward with our series of Women Acceleration Internship Program. So today's session is in the online mode and will be taken by Shri Arijit Dutt sir. Sir is General Manager for SIDBI, that is Small Industries Development Bank of India, the apex level development financial institution in India for promotion, financing and development of MSMEs in the country. Sir is posted in SIDBI's Venture Finance and Investment Vertical, which manages the venture capital fund of funds operation of SIDBI, as well as other initiatives such as venture debt for startup and innovation-driven MSMEs. Sir has been with SIDBI for around 24 years, MBA in Finance and Certified Associate of Indian Institute of Bankers. Sir, I welcome you for today's session on behalf of IGTTW Innovation Foundation, and now would like it to hand over it to you for further proceedings.
Thank you, Rahulji, for the kind introduction, and good morning to you and Dr. Arora. Pleasure to be here, and good morning to all the participants also. I of course, so I'll get into the session right away then. Although I would, it would be good to have some, and if the participants have any expectations from this session, so I can cover that. So either now or anytime in between, if I'm missing something, please feel free to let me know. And any specific issue relating to the topic, if that needs coverage and I've not spoken on it, so or any specific areas of interest, maybe upfront, if that could be said, it will also be good for me. I'll focus on that.
Participants, you can reply what you have covered and what you are expecting from sir.
Good morning, sir.
Good morning.
Good morning. I just would like to know that how SIDBI and other institutes like SIDBI can help startups to get through the finances and all.
Right. Okay.
That's
yes.
my particular
Thanks.
query.
Okay. Thank you. Yes, I'll
you.
be covering that. And so, anyone else? Or that's okay. So, I mean, mostly my session is also more focused on startups and what kind of funding options are available for them and what is appropriate.
Hi, sir.
Yes, please. Yes.
Hello, sir. Am I audible?
Yes, you're audible, please.
Thank you, sir. I am Shairi. I would like to understand from you, like, is there a process by which, as a service, if we want to reach out to some of the manufacturing units or who are funded by SIDBI, is there a possibility to kind of connect with them? So if there's a possibility of how to reach out to them as a service for my startup to them.
Okay, so I'll also address that query during the session. Thanks.
Okay, thanks.
Good morning, sir.
Yes.
Myself, Pooja Bhatia. So, sir, since we are very new to this startup, we have never started any startup. So, how to go about and how to apply for everything so that it is easier for us, since you are connected with SIDBI. So, we don't have any idea about it. So, in a startup, how all we'll be arranging for our funds and all that, how we have to apply the basic of it.
Sure, ma'am. I'll cover that.
Thank you so much.
Yeah. So I think these are helpful pointers, and so I'll just start. I have a PowerPoint slides, and I'll run the slides, and but please feel free to stop me, and I'm thankful that you all came forward and gave your expectations also. So that's very helpful for me. I'll just share my screen and just Just 1 second, I'm having a bit of. So, is it visible? Yeah,
Yes.
Yes,
it's visible. Thanks. Okay. It's now on full screen mode. No? I hope.
yes.
It's on full screen mode. Okay. So once again, good morning to all the startups in this acceleration program. And my session is mostly about SIDBI's intervention in the startup ecosystem. So I'll just this is just a brief 1 or 2 slides I have on what is SIDBI. So SIDBI was established under an act of Indian Parliament, and we are of course engaged as as initially it was said, in promotion, development, and financing of MSME sector, and we coordinate with functions with various institutions which are also engaged in similar activities. So by and large, there are three basic things, forms of activity that SIDBI does in terms of financing. So one is indirect lending, where we lend to banks, non-banking financial institutions, small finance banks, microfinance institutions, and whatever we lend to them, that money is in turn lent to MSME units, micro, small, and medium enterprise units, small scale units. So what happens is when we, for example, when we give a loan to a NBFC, that gives them funds, and with using those funds, they are able to ultimately give loans to the smaller enterprises. The second form is where we have a branch network with branches in all state capitals and some other industrial centers, and we directly give loans to MSME units. So, but we have a smaller branch network, so that's why we use this indirect finance also, where we lend through other banks and NBFCs and all. We have a long micro lending or microfinance, which is not very much related to the startups, but it's for women who are at the base of the pyramid, who are to help them get their livelihood, daily livelihood. Could be in things like tailoring, or selling vegetables and other food items, or running small shops. So we enable loans to these kind of entrepreneurs, very small entrepreneurs, and help them in their livelihood activities. Lastly, which is very relevant for startups, is the fund of funds operations of SIDBI, where I'll just come to that later. But fund of funds is the area through which we channelize funds for equity investment in startups and MSMEs through venture capital funds. This is just a slide on some of the associate institutions. So some of the activities of SIDBI are done by SIDBI itself, and we also have some associate institutions. So among the associates, there is Credit Guarantee Trust for micro and small enterprises. When you approach banks or anybody for a loan, normally they might ask you for a collateral security. And this is an institution which gives a guarantee so that you can get a loan without a collateral security. In lieu of a fee is payable, a guarantee fee is payable for that. But you are able to qualify for a loan without any collateral security. NCGTC is also a similar institution which runs different guarantee programs. SVCL should be Venture Capital Limited, which provides equity investment. It runs venture capital funds which are focused on startups and MSMEs. Acquit is a rating agency which is also focused on MSMEs. So credit rating agency for MSMEs. And Mudra is another institution or a subsidiary which gives loans of up to 10 lakh through a network of banks, NBFCs, and financial institutions. So for a startup, I would say that CGTMSC, NCGTC, SIDBI Venture Capital Limited, and Acquit, they are important. SIDBI Venture is in the equity side, equity funding side. CGTMSC, NCGTC, and Equit are when you try and raise loans. So that time they are very relevant. So you could look them up. And on the venture funds, on the right side of the screen, middle box, we are contributing to the corpus of venture funds by running the fund of funds schemes. Besides this, there are several other activities that SIDBI is engaged in, which is in the areas of green finance, cluster development, and direct lending. There are many government schemes that we are operating, and there's a lot of promotion and development activity also which SIDBI does, uh, with to build capacity in the ecosystem. So this is as one of you said that you would like to know the basics. So for MSMEs, as well, micro, small, and medium enterprises, as well as startups, there is a government definition. So this definition is something which you need to be aware of, and there's also a process for registration of your company or your enterprise as an MSME or a startup. So both these things you must be aware of. So micro enterprise is a enterprise, could be any form, where the plant and machinery or equipment has a written down value of less than 1 crore, and the turnover of that unit is also less than 5 crore. So I mean, for instance, I believe that most of you would probably be in this micro enterprise segment. As you grow and your turnover and machinery increases, then you graduate into the small enterprise. So if your turnover increases above 5 crore and remains within 50 crore, and similarly the machinery is it exceeds 1 crore but remains within 10 crore, then you are classified as a small enterprise. And once you cross that, then medium enterprise, if your plant and machinery equipment has a written down value of less than 50 crore and turnover less than or equal to 250 crore. So till that point, you are a medium enterprise. So till 250 crore, your company would be a micro, small, or medium enterprise. And once you cross these limits, you would be classified as a large enterprise. So I hope that's clear. Maybe you should just look that up sometime later also, because it's just a basic definition as provided by the Government of India. Similarly, for startups, startups also is defined by the Government of India for various benefits and schemes and everything. So the startup, if you start, from the left-hand side, the age of the company should not be more than 10 years from the date of incorporation. So that is the first criteria. The company can be a private limited company or a registered partnership firm or a limited liability partnership. So that's the second criteria. The annual turnover of that company should not have exceeded 100 crore rupees during any of the last 10 years or any of the years since it has been incorporated. Last is that fourth one is that it should be an original entity and should not have been formed by splitting up or reconstructing an already existing business. For example, just a very stretched example, say if Reliance were to have one division and that it splits and creates a separate company, that will not qualify as a startup, right? Lastly, of course, it has to be innovative and scalable and working towards development or improvement of a product, process, or service, and also have a scalable business model. So these 4-5 criteria, again, there is a Government of India notification which specifies this of February 2019. But you must understand this, and there is also a process of recognition of startups with the Department for Promotion of Industry and Internal Trade, which is with Ministry of Commerce and Industry. So you can get your startup registered there. Approximately, there are now around 80,000 startups which are recognized by DPIIT. That's which is part of the Ministry of Commerce and Industry, and they have their website called startupindia.com, startupindia.in. I think, I'm not sure. Startup India, if you search, you'll reach that, and you'll get a lot of useful information on these definitions as well as how to get recognition for it, what kind of benefits are available to startup, especially in things like tendering processes and all, and what are other schemes for assistance which are being run specifically for startups. So I hope I'm clear on the definition. Any doubts on that I can address. Right. So I'll move on.
Yes, sir. It is clear, sir.
Right. So this is, I think, with the sessions that you have done, these are the various phases of development, uh, starting with research and then with minimum viable product, then getting traction, where you're getting a proof of concept that there is somebody willing to pay for it, pay for whatever product or service, that and more that you are planning to deliver. And then, of course, making improvements based on the feedback. And finally, when you reach some stage of maturity where you can start working out customer acquisition cost or return on investment, value of customer, and focus on growing your business and improving your top line and bottom line, your profitability. So these phases, although it's a session more on focused on on how to raise funding, but these phases I have put here because the kind of funding that you raise is very much linked to which phase that your startup or your business is in currently, because it's not just raising funding, but it's the appropriate type of funding that you should be able to raise. Right. So these are the stages where an investor or somebody who's planning to give equity investment would look at. I mean, when we look at investment in startups, so basically we tend to classify startups in these 5-6 stages. The pre-seed stage, where where the startup is just in the kind of ideation stage, and it's trying to detect a problem and come up with a solution. Then the seed stage, where the startup has to validate the business model. Once that is done, then there's a growth stage where the startup focuses on adding new customers, increasing the revenues and all. After reaching and getting some kind of market size, then startup again expands further to create new markets. And lastly is the exit stage, where the investor would like to exit the company at a profit. So so as I said, at the ideation stage, the ideal kind of or pre-seed stage, the ideal type of funding is bootstrapping or family and friends. So I mean, this time you need very kind of friendly and benevolent kind of funding, who would give money to you without much of expectations and would be patient with this. The amount of funds is small, and so that's when you come to the validation stage. Probably this is where most of you might be, either in one or either in ideation or in validation. Then you would be working towards a proof of concept, and here you will have funding. I mean, the options available for you are funding from the incubator with whom you are associated. There are many government grant schemes where mostly they are run through the incubator networks, but there are many grant schemes today which are focused on startups in different sectors. So I mean, some of the schemes I could name are your Startup India Seed Fund scheme, which is through Ministry of Commerce and Industry. There are schemes of Ministry of Agriculture. Similarly, from Ministry of IT, MEITY has a number of schemes. Defense has a funding scheme. Ministry of Telecom has a different set of schemes. So based on whichever area or segment you are working, would encourage you to just look up the schemes and see if you are in readiness for that. The Startup India Seed Fund is something which is not dependent on any specific sector. So if you are a startup which is less than 2 years old, I think you should try and see if you can get funding under that. Apart from that, of course, there is the option of angel investors. So these are angel investors are persons who are very successfully, they have run successful enterprises, they have the funds to invest from their personal sources, and they not only bring in the money, but they also bring in a lot of guidance based on their past experience. So that's also a very valuable source of funding. There are different angel networks, the TIEs, the Indus Entrepreneurs, or the Indian Angel Network are some of the famous ones. Besides, there are, in every city, there are some angel networks as well. Uh, the last one is crowdfunding, where your idea gets funded from money which is collected from the public in general using a platform. So, yeah. So once, so once you, you have crossed that seed stage, and then you started making revenues. That is when venture capital, becomes relevant, and that's when the source of funding, when you need little large amount of funding, and you also need some support in terms of getting the connect for your markets. Some like one of you asked about how to to increase your business, how do you connect to SIDBI, MSME customers and all. So but the venture capital funds, VCFs or VC funds we call them, uh, they bring in capital, and if it's a good VC fund, so I just need to take this call. Just 1 second, please. I'm sorry for the interruption.
Yeah, hello. I'm Smriti. So, sir has got an call and he will be joining right back. So, as you all must be knowing that SIDBI is implementing this cluster program, because this is for the first time SIDBI has started to do that. We make a cluster approach in startup and innovation also. So Delhi is one of the clusters which has been adopted for an intervention of 2 years. We have got a dedicated KPMG team who is implementing it. So there are array of interventions which we are planning, which we are doing already. So in case, because cluster, when I'm talking about cluster and when I'm trying to make a new thing which was not, which was existing, but what we are doing, we are bringing all the aggregators together on one platform. So as a request, that as we are in this Delhi NCR cluster for next 1 year has passed, so say one more year we are here, and you are the beneficiaries who are going to get benefited out of it. So whatever comes in your mind, that because you are day in day out dealing with the pains, or I should not say pain, it should be like that you are the people who are dealing and you are the people who are going to establish your businesses, and this is the geography of Delhi NCR. So if you have any suggestions through which we can improve upon it, because we have on our disposal a very uh, specialized agency KPMG who is all together on ground. So we welcome suggestions from you to make this overall program more robust, so that more benefits can pass on to you people. So please feel free to reach out to us. Nakul is there, Saurabh is there. You can share your suggestions with them.
Yeah, thank you, ma'am. Ma'am, to add on to this, we have actually, circulated one survey format also to, understand the capacity building needs, right? So for the with the incubators, we have already shared, but with the starters, ma'am, also we are going to share it, and we can, do some need-based analysis and then perform the training programs as per the needs, right?
because you will appreciate that before this there are clusters in manufacturing, there are clusters in service sector, but this is something new which we are trying out. SIDBI is known for trying out the new solutions which result in overall benefit of the MSME ecosystem. So as sir was saying that all of you are in micro and will gradually come to the different stages of MSME before going out to the large segment. So when we are trying out, you are the first respondents. So please feel free to make it more robust.
Yeah, hello. Can I ask a question here related to this?
Yes, please.
Yeah, two things. Last time I tried one of the session I missed, for which I requested for a recorded session so that I can go back and listen to it. But I never got any update.
Actually, we have shared that presentation that last time investor pitching essentials of investor pitch deck, right? So I guess you must have received that presentation that we have shared to
No,
all the
maybe
participants.
I don't know, but I did not get that. See,
Last week
I
only I have
tried
shared.
one of the session. I think like Saurabh, I'm trying to reach.
Yeah.
Am I speaking to Saurabh, please?
Yes.
Yeah, I tried, but I did not get it.
No, I
Because
have Srinivas. I have already shared that presentation last week to all the
Saurabh,
attendees.
after the session, you
I can
connect
also
with
share.
him.
Yeah.
Yeah, connect
it's
with
a,
him and
or
try to
else
resolve the issue.
or else
Sure.
can I have a access to a generic URL where all these recordings will be placed like YouTube or somewhere, so that will be really helpful for everyone, not only me.
Okay.
It will be okay. Some generic URL where all the recordings are placed.
Okay. All right.
And
So let's
whatever the
discuss this
program,
after the session.
yeah, okay. And another
So
request
one
is
small
like,
query I have. Sorry.
uh,
Can I have a small query, please?
yeah, other one is like, can I have, did I a kind of information earlier, because I just saw this URL now and immediately I joined. I didn't have enough time before that intimating about this one, or did I miss that? You got my
Yeah,
question,
actually,
right?
it was the closed session. We were focusing towards, this women acceleration program only, right? So that's the reason we haven't shared this notification to all
Yeah, I
to
know.
all the
There
others.
could be.
Yeah.
I request next time if it can be shared.
Sure.
That
Okay.
One small query, as per the presentation which was being given, what does a cluster classify as? Is it like a industry cluster or housing cluster? What does it mean? Can that be explained a bit?
There are different ways to define a cluster because there is no specific definition for it. But how we define a cluster is simply is like that: if a similar type of activity is undertaken by, say, if it is an artisanal cluster, then more than 100 units in a particular geography. This can be
Okay.
less for a manufacturing thing, and it can be a different figure for IT, or say IT and ITS, or service sector. So the main criteria to define a cluster, what I can say, is a geography. So if all of you are startups who are you are getting incubated or are starting their businesses, and say the geography is Delhi NCR, so then we are forming a startup and innovation cluster in Delhi NCR. As I've said, that this is for the first time what SIDBI has been trying to do, to make it a startup and innovation a cluster, because earlier to it the cluster concept was not there for
Understood.
startups and
Ma'am,
innovation.
ma'am, I have a query.
Just to continue with my question, and is it sector specific, or the startup can be, or the units can be agnostic, sector agnostic?
They can be agnostic, but what we are saying, that they are geographically getting incubated in Delhi NCR.
Understood. Okay, thank you.
Ma'am, I just want to have a query. Can you share us the URL or something where we can actually see what all the things you are already doing, so that we should know that what all we can benefit it from? Because we are not aware of this cluster scheme.
See, a cluster scheme is not an scheme. What we are trying to do, we are doing multiple initiatives under it. It's not a scheme per se scheme, in
Right.
which we are doing like we are doing capacity development of incubator managers. We are doing this accelerator program with you. So all these activities coming together, people pooling in their resources. But if you want to have an overview of what all we are doing, I will request Saurabh and Nakul that at the end of this all this acceleration program, you can have a quick review of all what we have done under our CIP.
Thank
Sure,
you, ma'am.
ma'am.
Thank you,
Yeah,
ma'am. Thank
yeah,
you,
sure,
ma'am.
we'll do it.
Yeah,
Thank you,
and
Nakul, sir.
they will definitely make a network of few people, so that for anything further what we are going to do, they will be reaching out to you.
Thank you, ma'am. Thanks a lot.
Hello. Hello. Am I audible, ma'am?
Yes, you are
Yes.
audible.
Yeah, ma'am. Will you please explain, as sir was explaining, that how to reach the angel investors?
Just give us a few seconds. I is on a call and he would be
Right.
joining back. Yeah,
Right.
yeah,
Right. Thank you so much.
yeah.
Um, yeah, this is Rajesh from Testpan. I have one query. Is this SIDBI team cluster in Delhi? Because I would like to meet in person. Is that possibility there to meet?
You want to meet the SIDBI team, or you want to meet the team who is conducting all these cluster activities?
See, the either is because the purpose of this, clusters and everything is to get the end user the real benefits. So once I meet in person and explain my startup and the kind of requirement we have for our particular startup, uh, that will be really helpful if we have one-to-one meeting with the consultant.
Rajesh, we can meet in person. So, but I request you to, go on to letstartup.net portal, wherein, we already have, chatbot tool wherein you can request your queries, right? So that, this basically an online portal where we are gathering all the information and the requirements from the startup, focusing on Delhi NCR region to start with,
Can I have
right?
the portal thing once again, please?
Yeah, we'll share with you, and I already have shared this in our existing starter mentoring group, right? But we
Okay,
again will share that link, right?
sure.
So I request you to register first, right? And then all the benefits with respect to connecting with the investors, with the mentors, as well as the business development service
I
providers.
think
There will
I'm
be an
back. I'm
account.
extremely sorry for this interruption.
Yes, sir. Yeah.
So,
So, sir, we can continue our session. Sorry, sir. Yeah.
I'll just continue. And, so, as I was mentioning, these venture capital funds, VCFs are going to be the primary source of funding for you. And the advantage is that they come with equity, which is patient capital, and they also help you in scale up and getting market connect, getting the right manpower for your company, identifying the right business strategies. So it's just not a pure financing that they do. It's comes with management and strategic inputs as well. And apart from that, there are some venture funds which also give you debt. So debt is which helps you in. So they are more focused on startups. They understand that startups will not be having the typical profitability at the early stage, and they will be having, uh, they will be having your different kind of risk profile as compared to a normal company, stable company. So there are venture debt companies, funds which offer debt and help in increasing the cash runway. I hope you understand what cash runway means. It's they give you cash to meet your expenses over a period of time, and when you raise it by way of debt, that helps you extend that period of time to meet expenses. Because initially, all of your companies will be actually having net cash outflows. You will be losing money, and you will need funds to continue your operations, pay your salaries, service your markets and customers. And for that, you will need a continuous flow of funds. So venture debt is another option which helps you increase this cash runway. So once you scale up further, of course, from venture capital and growth equity, you get into private equity funds and other investors who invest in more stable but growing companies. Finally, every investor, what they look for is that this power of your idea and the growth and scalability in quick time, which your company can offer. So that these are probably the key, apart from, of course, the founder credentials and everything. But the power of the idea and the scalability and growth are some of the key factors they look at while evaluating. So as I discussed, I mean, just venture capital is something which you all need to understand how the industry is and what are the different ways it functions and what's the manner in which they look at proposals, because this is going to be the main source of your funding as you grow. So this is just a sort of highlight of what they do. So it starts from origination. It could be maybe through your incubator or accelerator. They would look at all your deals. They will screen it and evaluate, or probably they might be in touch with your company and track your progress over a period of few months before finally deciding. And because after they decide to invest, a key part of it is the terms and conditions and the valuation which is negotiated with them, with your company. So I think you have had a session on that, on term sheets, and but that's a very key portion, and what valuation you agree to. And then of course post in after they make an investment, they help you in scaling up, and if your startup does well, then they make an exit and earn a profit for their investors. So, so as I mentioned, the venture capitalist looks at the management, the market opportunity, the strength of the product, and the risks associated with the enterprise while making the investment choices. This is another thing for valuation, which whenever you try to raise equity, you need to understand the valuation, how it is done, how it affects you, because the lower the valuation, the greater is, I mean, you will have to dilute your shareholding or your ownership in the company for a smaller amount of funds. So obviously, somewhere a balance is struck between the founder of the company and the venture capitalist, where the founder would always look for a higher valuation. Venture capitalist may, try to drive it down. These are some of the methods which are done, like it's based on comparable companies or a market multiple. But mostly, a lot of it is based on negotiation and what's the current market practice and trend going on. So this is a graph which we look at. It's a very it's a simple graph, but it just shows that what kind of funding should be raised at what point of time. So if you look at the red line, it just shows how your revenue moves over time. So the red line, as you see, it's at the beginning, it starts at the seed stage, it is above zero, and then in many cases that it becomes negative, and there is a J curve or a hockey stick over there, which is called a valley of death, and many startups fail to survive that stage when their revenues are becoming negative. Their rather break even, or they have not achieved break even, they are continuing to incur cash burn. So that is called the valley of debt. And so at that point of time, you need seed stage capital. Once you cross that and you reach break even, that is when you need to initially look for venture debt from alternative investment funds. And once it's more stable, you have more stable cash flows, then you can go for debt from banks. Similarly, as your company grows, you look at early stage, you look at seed stage venture capital, and then growth stage venture capital. Finally, you look at private equity funds mergers and acquisitions and strategic alliances. That's in the much later stage before you reach an IPO stage. And then, public market is where you raise your money from once you become listed. Right? So this slide is clear. Please stop me if there are any questions on this. These are some of the typical instruments. I mean, usually it is by way of equity share capital, or it could be by way of a convertible instrument. They may fund you by way of a preference share or a loan, with the option to convert it into equity at a later stage. As I said, the venture capital brings in strategic focus, hiring and recruitment of senior management, planning your liquidity and cash flows. There's a feedback on performance and marketing, engineering support. They will connect you with customers in the industry and so on. Now, this is something which is also important, where governance is something which any external funding agency will look at, that how strong your governance arrangements are in your company. So we have attempted to kind of create a sort of step-by-step guide, that what kind of arrangements, governance framework you should have at which stage. So in the early or pre-seed, seed stage, you should have you should have clear roles for your founders and co-founders. You should be complying with your regulatory and tax returns and filing. So if it's a company, you should be filing your balance sheet regularly. Monthly financial and non-financial MIS should be there. Then a qualified CA should be there. You should have a board structure, and some powers should be there. Specific power should be there for your board. So everything should not be individually by the founder. And there should be employee and vendor agreements also in place. So when you have some arrangement for, if there is a supplier, you should have an agreement, proper agreement with that supplier. Similarly, whoever you're recruiting, you should try to have proper appointment letters and terms and conditions of employment with your employees. So as you grow in size, these kind of requirements, they get more and more refined. And so this is just a guide for startups. As they grow, they should also look at what kind of governance framework they have, and try and keep improving the same, because it is something which is very important for any external funding agency, be it a bank or a venture capital fund or any other fund. So now, I'll just pause for a minute. So, are you clear on what is a venture capital fund? And mostly, I'm sure you must be having some idea on what a venture fund is. So the point is how do they get the money? How do they raise the funds which they invest in startups? So the venture funds also, they they collect, or they raise money from different investors. So it could be private investors, high net worth individuals. It could be banks or institutions, financial institutions, insurance companies. So they give money to the venture capital fund manager, and that money is pooled, and then it is invested in different startups. So that's how it works. So SIDBI operates something which is called a fund of funds operations. So here and venture capital funds are basically, they are the technical name in terms of they are all regulated by SEBI, Securities and Exchange Board of India, and the technical name for the same is alternative investment funds. So these VCFs are a type of alternative investment fund. Now, what SIDBI does is, SIDBI does not directly invest in startups, because investment in startups is a specialized kind of work and requires a lot of deeper engagement. So SIDBI contributes to these venture capital funds, and then tells them that you invest at least this much amount in startups. So you don't invest in large companies, but you invest X amount. If we invest X, you invest at least twice that amount in startups or MSMEs. that is how SIDBI's fund of fund operations have been undertaken. So we have been doing this for very long, and so it's a higher risk kind of investment compared to a normal lending business. But we've been doing it since 1995, and we have launched a number. So we started with lending, investing in different states, and then in 2008 we did an MSME risk capital fund, and after that in 2015 we launched an India Aspiration Fund, through which we have supported all these venture capital funds. So most of the startup focused venture funds that you see, we would have invested some money in them and asked them to invest further in startups. Currently, the main scheme that SIDBI is operating is the Fund of Funds for Startups, which has a corpus of 10,000 crore, and it was launched as part of the Startup India Action Plan. So here also SIDBI contributes. So we have a website called SIDBI VCF microsite, sidbivcf.in, where you will get the details of the Fund of Funds for Startups. You can have a look at the different venture capital funds where SIDBI has contributed under this scheme. And the mandate for those funds is to invest at least twice that amount in startups, right? So effectively, by making money available for the venture capital funds, we are in turn and mandating them to invest in startups. So we are creating a wider pool of money available for startups for their equity funding. Similarly, there's another fund called the Aspire Fund, which is focused on agro and rural enterprises. This is also operated by SIDBI. This is a fund of Ministry of MSME. And lastly, there's the UP Startup Fund, which is the government of Uttar Pradesh, which is focused on startups which are registered in UP, in the state of UP. So this is there's just a fund of funds guidelines where, as I said, twice the amount has to be invested in startups as per Government of India definition. Lastly, another important scheme that you should know of is the Credit Guarantee Scheme for Startups. This was also launched very recently in October 2022 by the Department of DPIIT, Ministry of Commerce and Industry. The operating agency is the National Credit Guarantee Trustee Company, which is an associate of SIDBI. So here also loans are available. Loans given to startups can be guaranteed by this agency. So the risk for the lender is being reduced, and this is expected to help startups raise loans without, having to offer any collateral security. So I think that's about all that I have. So I tried to cover the basics regarding reaching out to MSMEs, in SIDBI portfolio. That probably you'll have to, because most of it is done. I think you can connect with Smriti and see if that is done and handled by our direct credit vertical. So most of them are working through that channel. So you can connect with Smriti and check up on that. So I would be happy to answer any questions. Yes.
Sir. Hello,
yes,
sir.
Please. Yes, please.
Yes, sir. Sir, thank you for the presentation. There are a couple of particular questions I would like to have an answer from you. Like a few points which you mentioned is the presentation. I have a couple of things. So one in the initial, you showed something on green funds being allocated.
Right. Green climate.
Hello.
We have a separate vertical for green climate. We call it green climate vertical, and there are some separate schemes for any kind of enterprise which has that theme. So tell me, it's mostly by way of loans. Yes.
So if I give you a small one line, you would understand why I'm a bit interested about that. I'm an architect. What I'm trying to do is promote the use of sustainable construction, and I'm trying to promote small vendors who are working in that segment. So whoever is working in that segment, I would like them to kind of access those funds with that I can meet the demands from the client side. So is there a way how I can maybe correlate them with SIDBI's part, or how this discussion can forward?
Yeah, I think Smriti can facilitate that. I mean, she can get you in touch with our team in the green climate vertical, and because we are also
So
looking
Okay,
at
so
yes, yes.
yeah.
Saurabh, you can
then what
take
I
these
can
suggestions from the participants, and I will reach out to the relevant verticals, like the what they are saying that they want to get access to our direct credit clients or to the green. So all these are looked after by different verticals. So Saurabh and Nakul, please collect all these things, share it with me, and then I will discuss with the relevant verticals inside the SIDBI.
Sure,
Sure,
sure.
ma'am.
We'll do that.
thank you so much, and I would also share my details with Dr. Arona's team. So from their team, I think it would be easy for you to collect all the data as well if need be.
Right,
Right? Thank you so much.
right, okay, yeah.
Hello. I have a quick question. Hello.
Yes, please, please.
Yeah, it's like how do we compare government grants with the some seed funds? We got the seed funding as well as the some grants.
Right.
So, what is the better one? So, instead of looking for more fund, having a grant obviously I feel is better than a fund. Is that obviously
Right.
right? Can you
Yeah.
suggest
So
on that?
when you're in initial phase like pre-seed or ideation or you're in an incubator, so you would need more of patient capital, and you would try to raise funds where you do not have to dilute your shareholding. So for both these purposes, any and grant also does not come with much of expectation in terms of returns.
Sorry,
So
voice is breaking for me, sir.
okay,
Yeah,
okay,
let me understand. Like three things. One is a grant, fund, seed fund, and the debt fund. So
yeah.
one is how the three compared.
Okay, I'll just switch off my video so that my voice comes out clear. So I can see if that's okay.
Please, yeah, please, sir.
So when you're see the kind of funding that you raise is based on, as I said, what kind of stage your startup or your enterprise is currently in. So if it's an early stage, it's in the ideation stage, before proof of concept, or even you've just done proof of concept. The advantage of it is always better to take, avail the funds by way of grant or any other similar scheme that is there, a soft loan or grant or whatever. Because the advantages are that firstly, it is patient capital. Secondly, it's not attached to much of return expectations. It helps you, refine your product because it's patient in nature. And also it does not, you don't have to dilute, in many cases, you don't have to dilute your equity, because the grant may just be released to you like that without any shareholding in your company. So these are very key advantages. So you should always, I believe, you should start with availing the grant schemes, whichever is applicable to your enterprise. Once you have some kind of clarity regarding revenues, regarding your commercial value proposition and scalability, that is when the venture funds, funding from venture funds, becomes relevant. In between, you can also take it from an angel investor, because he also is they are also patient investors, but they will bring you value in terms of industry connect or guide you on how to refine your product or service or whatever you're offering. And after that, there is some these VC funds will come in that following stage, where they feel that yes, you have something which is scalable and you have already demonstrated some kind of scaling, or you have a very powerful idea. I mean, they come in early also, but then it's purely on the strength of your idea. And there are some other platforms also which come in at the incubation and acceleration stage, but that capital is more commercial oriented, and then you will have to have discussions on valuation, and there will be some dilution in your equity. So as I said, the most advantages for you would be the grant, followed maybe by an angel investor, and then the commercial VC funding. Debt comes at even later stage when you have good amount of revenues, and that time venture
Okay.
debt will come in.
Sir, I
Yeah.
have a question. Sir, can I ask you a question?
I missed.
Sir, can we get the grants at ideation stage?
I think there are some schemes. There are some different schemes depending on your. I don't know what sector you are in. So there are schemes for biotech and all which are there in early stage as well. Ideation
Right,
stage.
sir. Right.
Startup India Seed Fund, as I said, is for startups which are less than 2 years old. So it's not grant, but it could be soft loan and grant together, put together. So I
Right.
think you should spend some time looking up these schemes based on your industry and segment.
Right. Right, sir. Thank you,
Yeah,
sir.
but I missed the comparison with the debt funding. The last point.
So the debt funding, see, they would look probably at two things. One is that you have some stability in revenues. I mean, you are at a certain level of revenues. You're not going below that, so you're growing up only. Secondly, they will look at when your next round of equity funding will come. So you need to have a track record of having some equity investor already there in your in your cap table, and then approach. Then at that point of time, this venture debt funds will come in, and it's also a high risk, but they take it based on these two, that there is an equity investor backing the company, and secondly there is the revenues are growing and company is doing well.
Ha, sir. But
Thank you.
what if the VCs are coming as well as debt
Srinivas,
funding?
we have to conclude the session. You can post the queries. We will forward it to sir.
Okay, sure.
There is another meeting also. Thank
Sure.
you, sir. Thank you
Thank
for
you.
joining and accepting the invitation. Sir, as you
Right.
can see, there are many queries that we will be forwarding it to you.
Sure.
Yeah,
No, thank you. It's a pleasure to attend, and I mean, I wish all of you the very best in your ventures.
Thank you very much, sir. Thank you for
Thanks a lot, sir. Thank you for your
Thank
time,
you.
sir.
Thank you, sir.
Thanks.
Thank you so much, sir. It was a
Thank
great
you.
Thank you so much, sir. Thank you for your time.
Thank you, sir.
Thank you,
Have a
sir.
good
Thank
day.
you, sir.
Bye-bye.
Ajit sir, thank you.
Thank you, Doctor.
Sir, can we get a chance to welcome you in the fiscal mode in our university?
नहीं जाएगी.
Yes, definitely, sir. I'll come down.
Okay, so that will be a great pleasure for
Yeah, pleasure
all
to
the
meet
women
you
participants.
in person. It will be a pleasure to meet you in person. Yeah.
Okay, sir. Thanks, sir.
Thank you. Thanks.
I'm connecting with you. Namaskar.
Namaskar.
Thank you to all the participants. We will be ending this session now. Thank you for joining.